Sanibonani, and welcome back to Money Matters with me, Ntokozo. Thank you so much for joining me today. Today's topic is about tax planning and some of the ways that you can reduce your taxes, whether you are an individual or a company. Watch this. Before we get started, please remember I am not an expert. I'm just a girl who knows a thing or two, who wants you to know a thing or two. So don't sue me ever. Thanks. First things first, what is tax planning? A lot of people think that tax planning is just about reducing your taxes from millions to like zero, but it's so much more than that. Tax planning is an arrangement that helps you maximize the tax benefits and manage your taxes according to legislation. So nothing illegal is happening, okay? Everything is above board. Some of the benefits of tax planning, okay? Whether you are an individual or a company, no one wants to pay taxes out of their ears. And yeah, so basically, tax planning, the first benefit would be that it would help you minimize your liability. So you will want to hire an expert when it comes to planning your taxes. Hiring an expert can help you minimize common mistakes because you're hiring someone who knows the legislation and practices in that space. So some of the things that maybe you're self-taught, you might not have that much of an extensive knowledge in. I am one person that believes in letting professionals do what they know how to do. In as much as I might be curious, but when it comes to like hectic, serious things, money things, hire professionals. So tax planning can take form in different ways. The first one is to reduce your taxable income. Obviously, you want to do this in a legal way so that you are not evading tax and getting arrested, which is illegal. But this involves like redirecting your income and maybe structuring your income in such a way that you're not paying tax out of your ears. You can also reduce your tax liability by lowering your tax rate. Obviously, if you're a company, this doesn't necessarily apply to you unless you are a small business corporation, which is taxed on a table. Like an individual, you have a table, it starts from 18%, it starts from 0 to 18%. Well, 18% is the first one. And then it goes up to like 45% for an individual. For a small business corporation, is structured the same way. If you make a certain amount of money, you will get taxed in this bracket. So I guess this also goes back to the lowering your taxable income. You would also want to maximize your deductions as well as certain write-offs that you might not be aware of. That is why I recommend hiring an expert, because the tax legislation has a number of different deductions that are allowed, and some of some of the deductions are not allowed. Maybe you're deducting things you shouldn't be deducting, and now you're getting penalized by SARS, which increases your tax liability. You feel me? This is also a form of tax planning. When you want to buy a house, sell a house, buy a car, sell a car, stuff like that. You need to know the tax implications and how it's going to affect your taxes. Is there another way you can go about getting rid of that car? Nothing illegal, of course. Everything above board. You might also find that you are entering into complex transactions that involve things like capital gains, estate tax, that an expert will have extensive knowledge on. Obviously, you can teach yourself these things, you can Google this thing, but sometimes if you're not really familiar with a certain field, the language and the jargon that is used can be a little bit confusing. So again, recommend hiring an expert to help you do that. Tax planning doesn't only involve reducing your liability, but it also involves managing your taxes. This means that you're paying your taxes on time, you are submitting the right documents, the due dates for everything, you know which taxes you're supposed to be registered for, which ones you're not really needed, and stuff like that. This also helps you avoid things like interest and penalties, which will again increase your liability. But also you might find that maybe you sell cake and you make a certain amount of money a month, and then you hear people talking about VAT and suddenly you want to register for VAT, but it might be detrimental to your company because you're not really it's not mandatory for you to register yet until you make, is it 2 million, is it 1 million? I'll have to double check. I think it's about 1 million in a year. Then you have to register for VAT. But if you're making less than that, you might find you're paying that for no reason. Like, you're probably paying out of your ears and you're like, why am I paying this? But it's not even mandatory for you to be registered. But also, I know some companies, some businesses don't really deal with people who aren't VAT registered. So again, this is also another thing that someone who is an expert can help you decide on. This is another element of tax planning. Because a lot of the taxes are paid around the same time every single year. They're filed and paid around the same time. Tax planning could also help you like predict how much tax might be due at the end of the day. Like for example, you submit provisional tax. Okay, so if you have someone, an expert, they can let you know that, hey, you're making a lot of profit. Maybe let's start a tax saving. This is how much might come up for you in the next couple of months, in the next 2 months, or yeah, again, help you make arrangements with SARS to pay it off. Whether you're an individual or a company, again, it doesn't really matter. So yeah, that is basically the brief summary of what tax planning is and some of the ways that you can reduce your tax. Okay. Yeah, I will be doing more videos breaking down the different types of taxes and yeah, how they can impact you. Thank you so much for watching.